Welcome back to 7-Minute Options on Thursday, October 14th. Second video of the day. I am taking a look at my positions that have very low extrinsic value. So the first position I'm going to look at here is RMO. So this is Romeo Power. This is a company that's involved in charging electric cars and that whole charging infrastructure. And for some reason, it's going nowhere. This is one of those futuristic stocks that was going to help America rebuild its infrastructure, blah, 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 get ready for the EV revolution. And it's been completely flatlining. It's doing absolutely nothing for me. And it's, I've been waiting on this one. The problem is right now, so I actually had a put here for a long time. I had a $15 put and I rolled it down to a $10 put, rolled it down to a $7.50 put. And right now, even though the IV rank says it's 52, in reality, that's just it's a relative number. It's not very volatile. There isn't a lot of pricing in these options, especially not because the stock is only $5 a share, right? It's at 487 today. So even if someone were to say, open up a strangle, right, and say, okay, right now it's at $5 a share, so let me sell the $4 call and sort of the $5 call and the $4 put, you get like 67 bucks. Like what's the point? So what I've been doing is I've been just rolling out the put, and I can continue to do that. I mean, there's nothing wrong with it. So if I take my $7.50 put, I roll it into December, for example, from the November expiration, which is where it is today, into the December expiration, I pick up $10 in credit. Great, that's 10 bucks. But the problem is this is eating up $750 of buying power. There's no more theta left, and there's no more time premium left in this thing because there's only $6 of extrinsic value, which means only $6 of value is going to decay between now and November 19th. The theta is a painfully low 0.4, so I'm getting 0.4 theta for 750 bucks. The stock has kind of collapsed and flatlined, so I would need to be rolling this out forever to get some of my money back. Historically speaking, on RMO, I started this back in March, and I am down $489 during this year. So this is one of my bigger losers this year. And so this 489 is already priced in. And so what I'm considering now is just closing out this option, getting my $750 of buying power back, and just moving on, right? Yes, in theory, I could keep rolling out this $7.50 put and picking up $10 of credit here, $20 of credit there. And it would take me roughly maybe 2 years to get back this 489. So, unless RMO starts really taking off, which I don't see. Something's going on with this stock that I'm not aware of, or rather, something's not going on with this stock, which is why it's just flatlining at $5 a share. So I'm going to close it. It's been a good ride, but it just didn't work out for me. So I'm going to take my $489 of losses. I'm going to close it out, and yeah, just be done with it. So there we go. It's filled. I got my $750 of buying power back. I can move on. I can go somewhere else with it. Use that seven. Actually, I'm not going to open up any more positions today. I like my buying power at 2,000, but if I do want to open a position, I can do a lot better than 0.4 theta, right? I mean, for a $500 buying power, I can open up a $5 wide iron condor in IWM, for example, right? I got 2.7 theta. If I look at this IWM iron condor, for example, I got 2.7 theta, and that uses only $500 buying power. I just got $750 buying power back that I can now go and do something else with. So that's one of them. The other one that I'm kind of mulling right now is silver. For some reason, this silver position, which is a 24 put, only has $11 of extrinsic value left. 36 days left in this expiration cycle. So I'm going to have to wait another 16 more days before I get to 20 days before. And usually right around the 20-day mark, that's when I tend to roll these positions. Right now, if I put this, take this 24 put, roll it into December, I only get $18 in credit. That number is going to rise slightly. So 16 days from now, when I'm 20 days away from the November expiration, I might be able to roll this for 25 or 30 bucks, and I think I'll do that. There isn't a whole lot of other options right now. Right now, silver has it's very low. It's only 7.6 on the IV rank, so the IV is very, very low right now. It's among the lowest it's been in a long time. Back earlier this year, IV was up here, now it's all the way down here. So um, this line represents a 24 put that I have on, that I've been rolling for a while. And you can see silver is kind of making a comeback right now, slowly bouncing back. I can only hope that over the next few months, if it crawls back to 24, I'll be in a good shape. Until then, I'll just keep rolling it out. But ideally, I'd like to close it out. So, um, you know, I'm not all that excited about closing it out. And just because I do have this belief that it's going to come back. I have no belief that RMO is coming back, but I do have some faith that silver is going to come back. So I'm going to continually, I'm going to be patient with it. I'm going to roll it out. But again, I'm not happy with it right now. $679 buying power. I only get 0.6 theta. If I want to roll up the strikes, I mean, I could take the 24 strike and roll it up to the 23 strike. But again, that would cost me $87 to lower my risk here by $100. Again, to me, that's not a terribly good deal, so I'm not going to take it. We just looked at rolling it out to December. It's not yet time to do that. I'm going to wait a few more weeks before I roll it out into December. Going inverted, it's like, yeah, I could sell like the 23 call. But again, IV rank is the IVR is so low that I'm not picking up a lot of money. There isn't a lot of credit here. I would only pick up $28 for opening up this naked call. Again, no effect on my buying power because I got the naked put already. But do I want to have that extra layer of risk just for $28 in credit? Really? Probably not. Do I want to open up a call here below the strike? Absolutely not, because that's already in the money. So no, thank you there. So yeah, I don't really have any good answers here other than just to wait for this to come back. I think silver is okay. I think silver is going to make a rebound. Why wouldn't it? It's just going to take some time. Might take a month. Might take two. As recently as August the 3rd, we were above $24. So I have faith here. We might have to roll it out for a few more months, but I think it'll come back. Every other position has a fair bit of extrinsic value. Yeah, silver is the only one here with 15. SoFi here has minus 28. I'm not worried about that one only because SoFi has been actually doing well for me. SoFi has been on a tear the past few days. It's up 50 cents today. And so this is good. I'm happy with where SoFi is now. And yeah, so I'll leave that one where it is. It's a complicated position. I got a naked put. I got a naked call. I have a butterfly out there that's expiring in 460 days. It's a bit of a complex layer of positions, but I'm happy with where that is. So I'll leave it there for now. All right. Short video, number 2 of the day. Thanks. Bye.